The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Show with Sylvia Amaro, and these are your headlines today. Asian equities plunge with Japan's Nikkei 225 hitting a more than 6-month low as tariff jitters set in ahead of Liberation Day. President Trump takes aim at Moscow, threatening secondary tariffs on buyers of Russian oil as he blames President Putin for dragging his feet on a Ukraine ceasefire deal.
In France, far-right leader Marine Le Pen faces a potentially career-ending court verdict today on charges she embezzled money from the European Parliament. Rescuers race to find survivors in the rubble in Myanmar and Thailand after Friday's earthquake killed at least 1,700 people, as the USGS warns the death toll could hit 10,000.
It's a big risk event week for markets. Liberation Day, as Trump has termed it, what is coming? And I think markets so far, we're just ramping up in terms of that fear gauge on Friday as we're heading into the weekend. And, Liberation Day suggests the shackles are coming off something, that someone's going to get liberated. But in fact, is that going to be the case? We're talking about border protections going on at this stage, reciprocal tariffs. And what we're seeing in the news flow is everything but a liberation. You might say long term for US manufacturing, there's some sort of liberation coming, but in the meantime, all markets see is a pain trade.
Absolutely. From an economic perspective, in the short term, there's no liberation per se, right? It's all about the pressure that is coming. I think the key at this stage is the uncertainty, because we have a lot of words from the president, but ultimately, what is the detail? We don't know sectors, we don't know countries. How is this going to be applied, even if he's going to use the emergency powers as well? So no doubt this is likely to be the market event this week.
You know what we don't know as well? The macroeconomic impact. I was talking to the Belgium central bank governor last week, and they do not know whether we're talking about lower growth, higher inflation, or just lower growth, and they don't know what policy is going to look like. In that context, how do investors and traders know what trades to put on? I mean, there's a domino impact on the risk of trade. Well, let's get into what we're seeing in Asia today. Very strong moves on the Japanese stock market. They are selling off aggressively some of these Asian boards, and you can see if you take a look at Japanese stocks down around the 4% handle. Europe is also set to open deeply in the red as traders gear up for what President Trump has branded Liberation Day on Wednesday. The US primed to launch reciprocal tariffs on a raft of nations. But the Wall Street Journal reports this morning that reciprocal tariffs could be ditched in favor of a return to the 20% global tariff Trump promised on the campaign trail. So even then, no actual certainty on what Liberation Day may hold. Let's get into those Asian markets more. You've seen those big moves across the board, particularly for stocks out of Japan. So let's get out to JP Ong for more from Singapore. Good morning to you, JP.
Good morning, Karen. And yes, we are coming to the tail end of the first quarter, and it's a brutal end to the first 3 months of 2025 out here in Asia based on that sell-off that you're seeing on your screen. And again, really brought to you by the terrifying tease, Trump and tariffs really hitting uncertainty and bringing up a lot of uncertainty for investors here on this side of the world. You can see there the sell-off from Tokyo to Taipei really hitting investors square on the mouth in today's session. South Korea also deciding today to lift a long-time ban on short selling that was implemented to try and stabilize markets. And it's an unfortunate time to do that because you're seeing the Kospi also among the big laggards in today's session. Of course, when we talk about tariffs, we talk about some of the big export items from Asia. And you have to talk about the car makers. Take a look at the likes of Toyota, for instance, and Honda, and even the likes of BYD. Remember, the electric vehicle car maker giant, at least out in China, also considered one of the big and upcoming car making stalwarts in the world. And you're seeing BYD shares in Hong Kong also falling today's session by about 3%. 3.8%. Of course, we also have to talk about chips because these might also be in the crosshairs of some of these tariff retaliations coming from the Trump administration. And we do have the likes of Renesas, for instance, the Japanese chip maker. They're leading the plunge, down by about 10.4% after they confirmed that they will also have to cut down on their global workforce because of what they said is sluggish demand for their particular kinds of chips that they're building out there. You have the likes of TSMC and SK Hynix also leading the downtrend, at least for these Asian semiconductor stocks. These also seen as catching the ire of the Trump administration because of the commanding market share that they've captured, at least with regards to the global semiconductor space. Now, if you take a look at Chinese markets, also looking like a pretty bloody picture, for lack of a better term there. But there is one sector that seems to be standing out. I'm doing my best to try and find some bright spots here. That's the mainland banks index, because some of the big state-owned banks in China are trying to recapitalize to the tune of about $72 billion. But that's the only bright spot we're seeing so far in the Asia-Pacific this Monday. Ladies, it's back to you, and good morning.
Thank you very much, JP. Meanwhile, I want to give you some more updates in terms of what we heard from Donald Trump. He has said, quote, that he's actually pissed off at Vladimir Putin and threatened tariffs of up to 50% on buyers of Russian oil if he thinks his Russian counterpart is blocking efforts to end the war in Ukraine. In an exclusive phone interview, Trump told NBC News he's very angry at Putin's criticism of Vladimir Zelensky's leadership, despite calling him a dictator himself last month. Trump explained his thoughts to reporters on Air Force One.
I was disappointed in a certain way. Some of the things that were said over the last day or two having to do with Zelensky, because when he considers Zelensky not credible, he's supposed to be making a deal with him, whether you like him or you don't like him. So I wasn't happy with that, but I think he's going to be good.
Trump also said he couldn't care less if automakers hike prices in response to 25% tariffs on all foreign-made cars. The president argued that if prices go up, customers will be forced to buy vehicles made in America. After the interview, an aide followed up with NBC News to say Trump was referring specifically to foreign car prices.
So let's put all of this into context and take a look at what's been happening in the market, starting with U.S. indices and how they closed on Friday. Overall, it was a negative session for U.S. equities. And of course, investors here are very much concerned with the uncertainty around the tariffs, no doubt. But on top of that, we received a lot of economic data that did point out to a potential economic slowdown in the U.S. economy. We got PCE actually coming in higher than analysts were expecting. The Michigan survey also highlighting that there's consumers have started to become even more negative about the outlook going forward. So there's a lot in the minds of investors. So I want to take you, in fact, to the quarter-to-date performance, because that's where perhaps the more interesting story is at this stage. Thinking about the Dow, we are down 2.3%. The S&P is down more than 5% on the quarter. But look at the numbers for the Nasdaq. We are down 10.3%. Let's see, of course, how U.S. markets will fare later today and indeed how they will ultimately close the quarter. But we are on track to see a very negative performance for U.S. equities this quarter. Let me take you to the tech space in more detail so you get a better picture of what has happened there. Microsoft, Alphabet, Apple, Nvidia, all of them on track to end the quarter down by double digits. Thinking about the Europe versus US performance, here's perhaps the even more interesting angle at this stage. While we have witnessed a lot of pressure for US equities, there's an outperformance happening for European equities. You have the numbers on your screen at this stage. The Stoxx 600 is on track to end the quarter up almost 7%. And of course, there's a question mark here as to whether this outperformance in Europe will continue, but no doubt that we have started 2025 with a very interesting market narrative where we have seen the end, basically, of the US exceptionalism, with investors now favoring European stocks. With that in mind, let me show you European markets in more detail over the quarter as well. Here, though, I would actually highlight the performance of the Italian market. We are on track to see the Italian market up about 13%. And over in Germany, we continue to see the extra DAX continue to outperform. We're up 12% at the stage, Karen. But this in mind with the fact that last year was also a very strong one for German equities, and that continues to be the case.
Well, let's pivot forward and talk about the next trades and what's coming on the back of some of the trade fears. Heg Bathgate joins us now, the CEO of Callanish Capital. We can use the CEO title now. Congratulations. Let me ask you what happens, because Sylvia's just been encapsulating how quickly investors have been disentangling from US markets and reweighting portfolios thanks to the firepower unleashed on this side of the world and fears around the Trump trade and tariffs. What happens next? Because part of me wonders whether we're still seeing an element of art of the deal. And who knows, and as we count down to Wednesday, whether any of this comes off and others go up in terms of reciprocal tariffs. So what do you make of the positioning so far?
Yeah, I mean, it's like the Punch and Judy show at the moment, isn't it? And we're only seeing part of the discussions that I think are going on behind the scenes. I mean, that sort of U-turn last night with Putin, I mean, you can see there's all sorts of things being negotiated, I think, that we're not even getting sight of. We just see the sort of fallout from it. I think the big thing, though, is when it goes from, it's now hitting Wall Street, and it's when it sort of spills over onto Main Street, which we haven't really seen. And of course, Trump's approval rating with his core sort of voters has never been higher. So, you know, this rhetoric, this sort of patriotism that he's pushing is really popular with his core electorate. But I think that could change very quickly if we start to see sustained weakness in the stock market, and then that's spilling over into the economy.
Well, to your point, the ripple effects are everywhere. It was in the durable goods, wasn't it? And some of the purchasing actions by Americans trying to get ahead of the tariffs, making those goods purchases. And obviously Wall Street has reacted too. The point I wanted to ask you was whether just this repositioning that we've seen to reweight to Europe, and let's face it, Europe has been an element of a safe harbour, but will it be as we get through this week? Is it going to be everything gets tossed out because it's risk off? And that seems to me, if you look at the Japanese stock market, a real threat.
Yeah, I mean, there's been this big rotation. Obviously, the market, the US market particularly, was really strong into the year end. So I think that's why I have to be quite careful with year-to-date comparisons. And then this has coincided at a time where you've seen a bit of consolidation in tech, which I don't think is necessarily related to some of the tariff talk as well. But again, I mean, the defence, sort of the rise in defence stocks in Europe looks to be massively overdone. If you take someone like BAE, for example, half of their revenue comes from US military spending. So that can't, I mean, net that can't be positive for them if they get some benefit from Europe, but that's going to be quite latent in terms of the pickup. But if Trump is pushing this onshoring stuff, he's certainly going to do that in defence spend. So some of the stuff that's happening in the price action we're seeing just doesn't make any sense when you look at the fundamentals.
I want to challenge you on that thought, on the outlook for European equities here, because yes, I understand the case you're making for BAE Systems, but for other European defense stocks, that's not necessarily the case. We are seeing national governments putting a lot of money into defense. On top of that, if we just take a broader look at the European stock 600, we are up almost 7% on the quarter. So I'm wondering whether the positivity for European equities is here to stay, broadly speaking, rather than just thinking about defense.
Yeah, I mean, I think, so defence, I mean, it's quite nuanced, isn't it? But at the moment, they seem to be trading in a pack. So I think people are trading this as a sort of theme rather than being fundamentally based on each company. But yeah, look, I think we saw the purchasing manager index data in China overnight as well. Is this a sign that there's a bit of a recovery? Is it just people bringing forward sort of capex in advance of the tariffs? The reality is we haven't seen the real impact of tariffs yet, and you know, what are we going to get, as you say, on the second with this Independence Day as well. So again, we have to see what's actually going to be the real impact, which is quite hard to assess at the moment.
I understand there's a lot of uncertainty right now, but ultimately, therefore, how do you trade around it? How do you position yourself right now?
Yeah, well, I think, look, the thing is you just can't take big bets. We're just sort of sitting tight because we just have no predictability. I mean, even if you try and sort of make sense of what's been said today, it's changing on a daily basis, and you're seeing a lot of hedge funds are sort of referring to this in terms of commodity prices and so on as well. So you just can't take big bets in this environment. I think it's just hunkering down, and we did see this a bit with Trump's first term. Remember, there was lots of sort of strong talk at the start of his term, and then things settled down a bit after that. I mean, whether he says he cares about the stock market or not, I think he really does. And he doesn't want this term. I mean, whether he goes for a third term is now the big question. But I don't think he wants, this term that he's got to be marred by recessions.
We'll just park the idea of a third term over there, because it just gets interesting whether that would be a positive or negative in terms of changing some sort of institutional effect around the United States and how we think about governance. I mean, that just unpicks a whole Pandora's box. But I want to come back to the bigger question that Sylvia is posing around whether this is a long-term view of the reallocation of money. There were some numbers that were served up. The FT was diving into the weight of money, saying European investors held about $9 trillion in US stocks at the end of last year. year about 17% of the overall value of the US market, not far off the market cap of some of the European equities or indices, which is just extraordinary. But things can get overly excited. And we've seen that in other trades. And FANG stocks are a great example. The last number of years, investors have been overly excited about the AI hype story. Are they now getting overly excited about the European prospects? And even to your point around defence, even if the money pours in, where is the capability? Where is the expansion ability for some of these companies that have now been priced very aggressively to the upside in a short space of time?
Yeah, I mean, if you look at the underlying economic backdrop for Europe and the UK, it doesn't look great, does it? So the domestic type exposure is not a theme I think you'd want to play in Europe. Then there's the manufacturing theme. You know, are we going to see a sustained uptick in Chinese expenditure? I mean, the question's out there, and I think the jury's out there. So, you know, I certainly wouldn't be rotating back in a major way to European stocks at the moment. And, you know, as we've discussed many times before, the only country you can get proper sort of grade A AI exposure is the US. There's no other country in the world that's able to where you can get that exposure. Now, has there been too much capex? Has there been too much expansion in data centers? And we will find out soon. But I mean, I think to write off the US stock market at the moment would be very, very dangerous.
That's a great point. Someone benefits from that AI trade, whether it's the tech stocks themselves or some of the other companies, Fred. Haig, thank you so much. Enjoy your week with Liberation Day coming. Haig Barko, CEO of Callanish Capital.
And coming up on the show, rescue efforts continue in Myanmar and Thailand after a devastating earthquake. We'll be live in Bangkok after this break. Plus, protests against Elon Musk and his involvement in US politics intensify. And do not miss our interview with the CEO of Siemens, Roland Busch. That's coming up today at 8:15 British Summer Time. Welcome back to Squawk Box. Now, at least 1,700 people have died in Myanmar. That's according to state media after a devastating 7.7 magnitude earthquake on Friday. Rescue efforts continue in the country and neighboring Thailand with international teams on the scene. Lin joins us now from Bangkok with more. Lin.
Yeah, hey Sylvia, there is an absolute hive of activity now behind me, and it's focused, of course, on this 33-story building which collapsed on the earthquake. It was the only building to collapse in Thailand off the back of this earthquake, keeping in mind, of course, that we're about 1,000 kilometers away from the epicenter, which is in Myanmar. And just moments ago as well, we saw that the Thai Prime Minister, Shinawatra, she made her way into this site as well. So certainly there is full international attention here on this site. But really, when we talk about the devastation coming out of this earthquake, it is across the border in Myanmar. And one of the reasons why, of course, all the media is here is because they simply cannot get into the country. There it is, crisis upon crisis upon crisis. As you noted there, the death toll sitting at around 1,700, but really set to rise. The US Geological Survey, their estimates are that it could be as high as 10,000, and that the economic toll that this quake could take could wipe out the annual GDP for the year as well. So that is certainly the focus here. And, you know, we have the UN saying that they need more help. Certainly international teams are there. India, Malaysia, China, to name a few, but it's simply not enough because the country has, of course, been in the throes of a civil war that has lasted 4 years, and even, you know, as late as yesterday, Sunday, we had heard that the military junta there was, you know, according to reports, had dropped some airstrikes in terms of some of the villages there as well. So that is really the focus at the moment. But as far as the situation in Bangkok, it is, as I said, this building, but also a lot of questions being asked about structural integrity, building codes and so forth, because How did this building in 2025 collapse when comparable buildings around the capital did not? The building was not finished. It was meant to be a state audit office, but certainly we've heard analysts saying that still it should not have disintegrated in the form that it has. We know that there is an investigation underway. We're set to hear back in about 7 days since this has all happened, with the industry minister saying that there seems to be, quote unquote, some anomaly in the steel. So we're waiting to find out what the preliminary results of that investigation are. Guys?
Lynn, there is so much happening there. Let me just pick up on the Myanmar story in particular. The junta and the strikes that are still being conducted, even on the back of what has been a devastating earthquake, almost using a natural disaster to their advantage. What's the international reaction, though? Because it feels as though there's so much in the way of geopolitics happening these days that it's hard to see what any international response would look like.
As many human rights groups have noted, this is almost like the forgotten crisis here. And certainly we've heard the ASEAN foreign ministers at the weekend. They had a meeting where they're saying that they will be obviously deploying in terms of providing that humanitarian assistance. But, you know, we're seeing videos on social media of people basically using their bare hands to dig through the rubble. That is, I suppose, the state of the situation. It is very much a crisis. As I said, there was already an economic crisis there. The UN has said you've got millions of people displaced, and certainly food insecurity impacting about a third of the country. This was prior to this natural disaster happening. And there's a bit of an information vacuum as well. I mean, we know that it is tightly controlled. Communications are tightly controlled in the country by the military junta. And I suppose if there was any silver lining, we've heard rights groups saying, will this actually draw some attention now to the crisis in Myanmar? Guys.
Lynn, thank you very much for bringing us the latest. We do appreciate it. Lynn there reporting. A protest took place outside Tesla's dealerships and showrooms around the world this weekend as people gathered to rally against CEO Elon Musk and his involvement in US politics. In West London, demonstrators carried signs that read "Don't buy Tesla" and "Bankrupt Elon." They also called out Musk's involvement in the so-called US Department of Government Efficiency, DOGE, which was tasked with slashing federal budgets. To me, this is a fascinating turn of events because we'd seen protests domestically around DOGE in particular and the ties to MAGA, to the administration. But now that it's sweeping across other countries, and don't forget Tesla has been very popular outside of the United States as well, often a top-selling brand in many countries. To see this narrative, and you know, right here in Europe, it's not necessarily the association with the US government. It's the positioning around far-right governments in Europe, the connotations that has for a lot of populations. Very strong. So we're talking about some sort of a buyer's strike that could be happening now for Tesla. People not wanting to be associated with the brand, not wanting to own one. What does that do to the first-hand market and the secondary market in Europe for Teslas?
This at a time when the numbers already show lower sales on Europe for Tesla. Ultimately, I'm wondering whether there's, let's call it a boycott potentially that could be here to stay. Because sometimes, you know, consumers do take these approaches, but the boycott doesn't last for a very long time. So I'm wondering about the long-term pressure here. Let's see how this will unfold. But when you want to buy Tesla, when you're thinking about trading Tesla, it's not just about the dynamics of this company. It's about what the CEO is doing, how close Elon Musk is, of course, to Donald Trump, and how, you know, changes in geopolitics, in economic policy, comments from Donald Trump, how all of that can then impact the share price. So it goes beyond the business. There's other elements here when you think about whether you want to trade Tesla as well. Just looking at the year-to-date performance, we are down 30.5% in Tesla. But on a yearly basis, however, the stock is still up almost 50%. So the short-term pressure is definitely here. The question is whether it's going to stay.
I think there used to be a view that if you bought a Tesla, you were spending your hard-earned money to do something good for the planet.
Yeah.
And obviously that is now changing on a dime the way people associate with Tesla. But what do they buy instead? Or are they buying at all? Would be my question. So what do they buy instead? Is it going to be a Chinese car, a BYD, or some sort of competitor out of the Chinese market? Is it going to be a European car? Because let's face it, the lineup of EVs coming from some of the European car makers is quite strong. And do you see the home market double down in the face of tariffs from the US administration? administration. That is one point. The other point is if we're talking about a recession or stagflation, do consumers have the same firepower to buy cars that they would previously?
That's it. Ultimately, though, it's a very competitive environment, and European car makers are facing a lot of pressures. Seeing into space, some news out of Volvo. Volvo Cars has reappointed the former CEO, Håkan Samuelsson, to succeed outgoing chief executive Jim Rowan. Samuelsson led the car maker for 10 years and stepped down in 2022. Volvo Cars has warned it faces a challenging year amid geopolitical challenges and fierce competition as well. Now, in banking, UniCredit received ECB authorization to buy Banco BPM in a deal worth 14 billion euros. The Italian lenders board also approved a share issue in order to finance the deal. Domestic market regulators are expected to approve the offer document this week, clearing the way for UniCredit to launch the tender. So an important development there for UniCredit. Meanwhile, European aerospace firms Airbus, Thales and Leonardo are reportedly in talks with the EU antitrust regulators over a potential merger of their satellite businesses. That's according to Reuters. They have reportedly begun early stage talks in a pre-notification phase that is said to be unlikely to produce any material outcome until next year.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.